Hey, everybody, welcome to Three Ideas, a special research, how the pros do it. All week long, we've been looking at how people approach research with some of the best contributors in the Real Vision Network. Joining me today are two of the best. That's Mish Schneider, Chief Strategist at Market Gauge. Hey, Mish, nice to see you. Happy Friday.
Same to you. Great to be here.
And joining you is also Holden Milstein, cryptocurrency analyst at Market Gauge as well. So I just want to jump right in because we've been talking about everybody's frameworks and how they got to research. Mish, on your part, we know you have this background as a teacher who ended up on the trading floor, but what actually got you to research? Because this is just core to who you are now.
It's an interesting journey, actually, Samuel, because as a floor trader, you don't really do a lot of research. It's much more instinctive type trading and following momentum and noise and price. So you may have not even been aware at the time of trading of what any fundamentals might be going on in the background. And of course, since those days are long over, and since I've been more involved with stocks and ETFs and still obviously futures, and the fact that I now provide content, whether it's through Real Vision or on mainstream media or in my own writing, it's kind of forced me to have to back up what I see technically with some level of research just to make it seem like it's more credible, number one. And number two, even for myself, to be able to have some fundamental basis. So, in the topic we're talking about today, I think we went through a long period of where fundamentals may have not mattered so much. But now, with the recent explosion and the fact that we have these ETFs in cryptocurrencies, it has really behooved me to look more deeply into the research as we're trying to figure out what this all has to do with the economy in the long run.
And Holden, similarly, I mean, you're really focused on crypto, although Mish increasingly. What's kind of the background that took you to this place of this deep research and developing products and tools to help you do this research?
Sure. Well, originally, I actually ended up writing my senior thesis as a undergrad in college about, this was back in 2016, 17, about the policy side of how blockchain can help build out infrastructure in developing countries. That it was a very niche topic, but that focus was kind of what spurred me into the crypto realm. From basis in policy, I went on to work for a cryptocurrency ATM startup for a few years in Chicago, actually during the pandemic, and being a part of a small cryptocurrency company or crypto adjacent company, as it scaled, I think we saw our total number of employees grow by about 5 times in the span that I was there. I was able to take a role in everything from compliance to really understanding blockchains at their core, what different coins are created to do. So I have a pretty well-rounded background in crypto as a whole.
And what we're going to do through, and we're going to do three ideas, which people just love. You know, people come, and of course, these are just ideas. This is not trading advice, and that's not just legal mumbo jumbo that we say to protect ourselves. It's because people's time frames can be so wildly different, and the amount of money that you can contribute to these types of ideas may be totally different from what Mish or Holden are talking about. But really, what's underpinning the three ideas we're going to be talking about today are tools that you guys are developing that we're offering in the Real Vision marketplace. You can go to realvision.com/crypto Mish if you want to look at some of the tools that Mish and Holden are offering. Crypto Pulse is their tool. There's a big discount on it, which is what we're trying to do with the Real Vision marketplace. We know that people don't just want Real Vision content, that they also want to get research, and we're trying to get it for you at the best prices. So basically what this tool does, it's a done-for-you trading system is the easiest way to talk about it. But through each of these trades, and these trade ideas, you're going to hear Mish and Holden referring to this. So let's just jump into the first idea. I'll start with you, Holden. The first idea that you have really centers around Bitcoin. So as you bring up these charts and walk us through how these tools work that are available to anybody who's watching this. So let's jump in. Why Bitcoin and why right now?
Sure. So first things first, Bitcoin, without looking at the exact number, for quite some time now, has been responsible for something like 60+% or 50+% of the overall cryptocurrency market cap. So that in and of itself shows that Bitcoin is going to be a pretty good representation of what the entire market's going to be doing, at least on a long-term time frame. In the short term, you will see tons of trend divergences. You'll see different focal points within the crypto market really outperform others. But at the end of the day, Bitcoin is both the first and longest surviving cryptocurrency. So given its stature, you really can't ignore it as a benchmark for understanding the crypto market as a whole.
So let's jump in with the first chart that you have for this idea with Bitcoin.
Sure. So now that we've got the chart up, some of the terms on the screen and a little bit of the breakdown of what you're looking at might be familiar for some of the viewers. I was even just looking at Plan B's stock to flow model like this morning, which uses similar terms for defining different segments of Bitcoin's long-term market cycle. Learning under Mish and Keith and all of my other great mentors at Market Gauge, I learned how to trade and analyze markets more from a traditional equities approach. And from that approach, very early on, I came to understand that there are long-term super cycles in almost any market, especially risk assets. And when it comes to Bitcoin, the same thing looks to be true, at least up until this point, where on a roughly 4-year basis, or for those of you who are a little bit more savvy, really more so revolving around halving events. Bitcoin has a repeatable pattern with similar characteristics that occur in similar orders each cycle, and that allows us to attempt to predict long-term trading ranges, targets, and it's really helped us, especially in the past year or so, while we were coming out of a long bear market, to recognize what targets we were looking to see Bitcoin get to, what milestones we wanted to see it overcome. And that's really held up extremely well up until right about this week, where things have gotten a little bit interesting.
So what's different now?
Well, in case you guys have been living under a rock, which I don't think you have, Bitcoin spiked up to, I believe it was as high as 64,000. The wick on that may have been higher depending on the exchange. We were really anticipating some type of a pre-halving rally. We weren't necessarily anticipating that Bitcoin would run all the way back up to its previous all-time highs, or right below its previous all-time highs, before the halving event even happens. So that right now is leaving all of us, and if you go look on Twitter, Reddit, Discord, wherever you're following with the crypto community, the question now is, will Bitcoin have to pull back from here, or will it just keep going on, break new highs, and enter price discovery? I personally would love to see a pullback, and I do have some levels of interest that I think we could see Bitcoin get to for potential buy opportunity. But at the same time, this has been an unprecedented move, what I think is on the back of all of the new Bitcoin ETFs.
And if we go to your next chart, Holden, the second chart that you have for Bitcoin, and we look at this expansion period, the compression between $36,000 and $47,000, flesh that out for me, because this is really key to what you're seeing.
Sure. Now, keep in mind, this is not a perfect system or perfect framework for understanding. It's more so a reactive way of looking at historical patterns and trends. And by looking at historical patterns and trends, we can attempt to predict future target levels to try and trade towards. So one example of that is you'll see all of these dashed horizontal lines going across the chart. Let me just focus on two of them. So in order to define what our expansion range is in this long-term pattern, the first thing to note is as soon as Bitcoin on a weekly time frame closes at or above its previous all-time highs, we are no longer expanding. That is how we are defining the beginning of a bull. That's not ignoring other definitions of a bull market. That's just one that we have come to really rely on, and has really, for the last 2 cycles at least, been consistent. So that will be the top dashed line that defines the top of our purple box, or the top of our expansion range. The bottom of our expansion range is typically defined by, in our bear markets, we get consistent selling, but we will inevitably find some degree of a support level even within the bear market. Typically, that main support level will then serve as both the bottom of our expansion phase as well as the top of our accumulation phase. So you can see here, we had this marked pretty much since before the expansion phase even began, that we were looking for that 36,300, or we'll call it 37,000 level for Bitcoin, was what we wanted to see to officially announce, hey, we're no longer accumulating, we are now expanding. And within this range, where we were really expecting to see key resistance come into play, if you go back to our bear market in 2022, we like to draw a horizontal line at what I call your main suckers rally high close from the previous bear market. There's a suckers rally or several suckers rallies in every historical bear market. Typically the largest one, or the first significant one, is where we'll drop that line. And that has served as a really good mid resistance point in the expansion phase historically. So you can see this time around, we actually ran up to about 47,000, which was our midpoint. We rejected it, digested, and then we got the real breakout, which is what we are, experiencing now. So my question is the same as everyone else's. Is this time different, where we will see Bitcoin break, above into new all-time highs even before the halving occurs? Or will we get a really nice pullback? And if we do, I'm looking for that $46,000, $47,000 level as my big pullback support to be buying around if we get it.
And which brings us to the last chart that you have around Bitcoin and going out of expansion and into discovery. So if we look at these 2 lines as they break out of there, just walk us through this last chart there, especially focusing up in the upper right-hand corner there.
Sure. So we have a more detailed set of definitions that we talk about with our premium subscribers, where you can really understand how to predict future moves based on the levels that we've defined here. And one of those definitions that specifically clarifies how the expansion range works, or the expansion phase works, is it's a bit of a misnomer. It's not always expanding slowly straight upwards. Oftentimes we will see Bitcoin's price actually drop in anticipation of having an event. Really, truly, the expansion phase is a period of increased volatility before a new bull market and new all-time highs. So the dark purple quadrant in the bottom left of the 3 expansion phases on the screen here, that represents where we would expect, based on all the rules and definitions that we have outlined, where we would expect to see Bitcoin trading leading all the way up to the date of halving. The past 2 expansion phases, it played out perfectly, and we really, with Bitcoin only really going back to 2009 on the chart. The first example of an expansion phase isn't that meaningful, but you guys can see in 2016, leading up to the halving, Bitcoin ran, and it really didn't see much of a pause until the halving date itself, which is represented by that vertical line on the chart. After the halving date, or leading right into it, you did get that relief rally, and that was your last buying opportunity. It even dipped below our support level in 2016, and that would have really been your last chance to get in before the bull market truly commenced. And to me, this time around seems fairly similar to 2016, far more than it did to 2020.
All right. Very interesting. Again, this is all part of the tools that you guys are offering. People get that at realvision.com/crypto Mish. Speaking of Mish, I want to go over to the second idea here, Mish. I'm sure we'll have crypto Holden at some time, but we're beholden to Mish for all of her years of good advice here on Real Vision. And your second idea is around Coinbase, and it actually takes us back to Valentine's Day. Tell us why.
Well, yeah, but before I say that, I do want to say from a research and fundamental standpoint on this whole crypto space, in 2010, my nephew had said to me, I just bought Bitcoin at $5. And we're like, what the heck is that, being the typical baby boomers that we are? And he said, well, it's the future as decentralized currency, and that eventually there'll be no banks, traditional banks, there'll be no paper currency, and everything will be traded within some type of digital exchange. And so that's really where this whole thing started. And then basically I didn't do very much with it because you really couldn't. You could only trade a couple of instruments, and I didn't know anything about having a wallet. So the reason why I'm mentioning this to you is because it was when Holden came into our life. It was great because it was the perfect marriage of the baby boomer experience, wisdom, and mentality, along with, okay, now how do we put this into action? So I just wanted to mention Holden has been instrumental for us on so many ways. And that's what brings me back now to Valentine's Day. I had already had a position in Coinbase going back to October, November, because Holden and I had a conversation, and we talked about the fact that the spot Bitcoin was going to be inevitable. Remember at that point, it was like, will it, won't it, will it, won't it? Okay, it's this date, it's that date. BlackRock was starting to enter the space. And so from a technical standpoint, I had to pick an entry. And if you look back at where I have that arrow that says initial entry, that's really where I got in. So it was even before October, it was sort of the summer. And
that's right here on this first chart they have. Yeah, exactly.
Yeah. And the reason why is you could see it was poking its head out of the 50-day moving average, which is that blue line. I'm very much of a phase trader. And I like when something is coming back into a bull phase. In this case, as it was clearing the 50, it was. But you have to have a risk parameter. And so I noticed that the 200-day moving average, as that was also creeping up, around $70 was a good place to risk. So a $10 risk in something that I anticipated could really go up strong was great. And that's why I'm showing you. So in terms of Coinbase in and of itself, on Valentine's Day, if we fast forward, I was on Bloomberg, and they said, for a Valentine's Day special, we want to know what you will marry, what you will date, and what's got away. And the one that I said I would date would be Coinbase. Incidentally, marry, I said silver, but that's a conversation for another time. And at that point now, we had the spot Bitcoin already in place. And so as a result, we started to get the bull market in all crypto assets with the new ETF. That was something, obviously, that you had money piling in because it was really the only exchange at the time besides Hood that you could do publicly trading in the crypto space. So we got this great explosion, as you can see. And the reason why I started taking profits up there was because we were ahead of earnings at that point. And also once we started to see it turn down, and this is a very spectacular trading instrument because it's so volatile. It's like it reminds me of the old commodities days. I got out. And also Holden was telling me at that point that he thought that this could really come back down and test around 110. But it didn't. It sort of started to consolidate there. So if you move over to where it says re-entry, you'll notice there's above that, there's a red horizontal line. And that's our January calendar range. It's a 6-month calendar range, and it's particularly powerful in January, number one, but in certainly election years, and now even more so this year because of the fact that we had the spot ETF. And so when it got back, it looked like it was holding and was going to get back through that calendar range low, which it did. We got back in, and we've taken a couple of profits along the way, but we're still holding our tail. So that's really powerful. If you look at the middle chart there, you can see how well it's outperforming the benchmark, which is the SPY. And if you look at the bottom chart, in terms of momentum, it's kind of stalled out. But at the same token, so has the price here at around this 204, 205 level. So that's why we're going to go out a little bit in time frame.
And target that you have here?
Well, ultimately, the IPO price was 380, so it's possible we can get there in time, especially, again, as Holden and I have been talking about the possibility of Ethereum ETF and Solana ETF and all of this traffic that's going to be continuing to come into the space. I think you could have patience. My initial target, though, right now, if we can get through these recent highs of around 215, which you'll see on the weekly chart, I think we can go to 325.
And what would really make you change your mind here, Mish? You have another chart that I think might speak to this and a pullback. So let's walk through that.
This is the weekly chart. So you can see I have black horizontal lines because this is where I think support level is. You can see the resistance level. If you move your eyes to the left, you can see why it's resistance, because back in 2021, it held as support. And when it broke down, we haven't been through that level. That's just simple charting. And that's kind of what Holden was describing before with his charts, is the suckers rally, if you will, looking to where things, in this case, it would be the reverse, where things broke down. So once we get through 215, there's that 325. You can see that goes back to the resistance, again, that we saw in 2021 before we broke down. And then in the third chart that I brought, and I'll answer your question, Samuel, I did hear it about what would make me change my mind. But in the third chart here is monthly. This is the 23-month, and you don't have a lot of data on here on a monthly chart. Usually I like to do a 23-month and an 80-month because it's a 2-year business cycle and then about a 6 to 8 year business cycle. This is new, right? I mean, this really only was issued about 4 years ago. So you can see where that historical high is up in around November of 2021, up at around that 380. And this is good perspective, because if there's any doubt that we started an expansion, we certainly started that expansion. The last bar there is February, since we have a new month today. So February, January, December, November is really where it started to expand into a 2-year business cycle, which tells me that any pullback should be bought. So to answer your question, what would make me change my mind? I would say you have to think about the fact that we still don't really know where the crypto economy is going. So if there was anything to come out that would question the validity, and I don't think so, but it would have to be something very compelling. I mean, the last crash was based on FTX, so that we knew was short-lived. It would have to be something really fundamental change to say, oh my God, this was, like some people think that this is just a fraud. It would have to really prove that. And I can't imagine at this point what that would be, number one. But also, I mean, maybe from a more temporary blip would be some kind of a cybersecurity event or a hack or something like this. And also, we have to realize that at this point now, cryptocurrency is still interest rate sensitive. And so any of these things, I don't think would be the fatal blow, but it would certainly maybe give us the opportunity for some kind of a correction, like Holden was talking about, to get in at cheaper prices. But I don't see that happening right now.
Sounds like you're pretty firm there. We're just getting some questions coming onto the platform. Feel free to ask. We're actually also putting this on YouTube simultaneously, not something we always do, but because research is so fundamental to people on their financial journey that this is part of our commitment to democratizing finance. If you're on YouTube, though, we ask you to come over to the platform. It's free to sign up, realvision.com, to put your questions to Mish and to Holden. One that we have right here coming in from Nivtej on the RV website. How do you select indicators the indicators that you use, and how do they fit into your larger macro thoughts? You want to start, Holden? Pick that one up.
Well, I think it's actually a perfect question for me because of the stance that I take on technical analysis and the use of different indicators. And that stance is less is more for me. Really, I focus on just a handful of some of what I consider to be the most meaningful indicators on a price chart. Those include our significant moving averages. So on multiple different time frames, whether it be for stocks or cryptocurrencies, we will typically use a 10, a 50, and a 200-day moving average to help us just define where general support levels and resistance levels may be. I like to use standard Bollinger Bands on most of my charts. And then, some people like an RSI. I like to use our in-house momentum indicator, Real Motion, a lot. And unfortunately, I haven't prepared anything for today's session, but we talk in our market gauge crypto pulse sessions quite a bit about using the Real Motion indicator to recognize long-term, or you could even call it generational, overbought or oversold levels. And for me, we even actually have a quantitative trading strategy that has a pretty strong basis in that momentum indicator. So again, moving averages, I like my Bollinger Bands, I like having a momentum indicator, and I'll look at volume. Other than that, I don't really like to complicate my charts too much.
And just want to thank Shane for the questions that Shane put there. I think you've gotten to them already when you were talking about the pre-halving dump in 12 to 18-month bull run. But I want to keep you there, Holden, for 1 second, because I want to get into the third idea that you have. And
Sure.
That's why Solana should be the next ETF after Ethereum. So walk us through this, the timing for this, and why you would be where you are right now.
Of course. So the timeline is really important to consider in both recognizing what is the likelihood of us seeing an Ethereum ETF actually get approved on this upcoming set of deadlines, and what will it mean for the rest of the market, the crypto market, if these Ethereum ETFs get approval. Because as we've already seen with Bitcoin, the inflow from institutional funds that has already taken place, it's been 6 weeks, I think, 7 weeks since the 11 Bitcoin ETFs were approved. Bitcoin's flown ever since. So that's rationalized by new cash flowing into the space. And interestingly enough, but not all too surprising, it's remained pretty concentrated in Bitcoin since the beginning of this year. But what I want to focus on is what led up to this approval and how might we be able to take advantage of something like this still. So looking at the chart, I've got only 2 dates pointed out. And this is a weekly chart for Bitcoin. First one is going to be the date at which BlackRock, and I personally subscribe to the idea that BlackRock was really the straw that broke the camel's back on forcing the SEC to acquiesce a bit here. But between BlackRock filing for their ETF and then the eventual approval, I believe I measured somewhere between a 70 and an 80% run up in Bitcoin's price. Now, you can obviously see on the chart what has happened since it's been approved. And if y'all want to go ahead to the next chart, the only other cryptocurrency at the moment that has a legitimate chance of seeing its own ETFs become available on the stock market, or it's Ethereum. I don't know the exact number of applications currently pending. I know it's, I think, over 8 or 9, probably all the same guys that were applying for Bitcoin. But you can see a very similar effect in Ethereum's price action. Since BlackRock filed for an Ethereum ETF in November, compared to what we saw in the span between BlackRock's Bitcoin ETF filing and approval. So even still looking at Ethereum, the assumption needs to be that if or when its first or multiple ETFs get approved, and I know that the first final deadline is May 23rd, so it's coming up quick for a decision on those ETFs. That in and of itself, that approval, if we're going based off what Bitcoin has already done, will be another catalyst for Ethereum and very likely propel it to new all-time highs. So even before we speculate on what will be the next coin to see, a flood of applications come in, Ethereum's still likely going to be pretty actionable as a trade revolving around its ETF, and that May 23rd deadline is going to be a big.
Give us some idea about your thinking when it comes to time frame here. Obviously, this is somewhat less technical than the first idea that you walked us through, Holden. And it seems like you think these time frames are shrinking in terms of approval. So walk us through that.
Well, I don't have the timeline, and I actually had written this all out for my own sake in front of me, but I think that the Winklevoss twins had applied for the first Bitcoin ETF back in like 2013 or 14. Which was around the same time that Grayscale spun up their GBTC fund. So although this has felt like a recent conversation in crypto, and it's really been the conversation that has gotten everybody involved, even from, my dad's asking me about these ETFs. So it's important to note that this has been a long-running conversation that has really picked up steam in the last year. Whether it be the XRP win over the SEC last year, or the group that came and basically decided we are going to make the verbiage on every one of our Bitcoin ETF applications the exact same. There's clearly a fully fledged, larger scale initiative in place to popularize this asset class. And the Bitcoin ETF being approved, before that was approved, I believe, is when, November 9th, we already saw Ethereum applications coming in anticipation of Bitcoin being approved. So the question then becomes, if you are as optimistic as I am, which I am, that Ethereum could, see its first physical ETFs traded by the summer, the question will become, what will come next? What logically makes the most sense for all of these providers to want to offer to, traders in the US and elsewhere? What vehicle do they want to create? If you look, and I don't know, Samuel, if it's the next chart in the slide, but we have that market cap dominance chart. Yeah, it is. Okay.
So just to your point, before we move on too quickly,
Sure.
the Winklevoss twins first filed for that Bitcoin ETF in July of 2013. So 10 and a half years to your point about
Correct.
these timelines shrinking.
Well, and with the Ethereum application coming before Bitcoin ETFs were even approved, if I were betting on a horse here, I'd be betting on the horse that I think is going to be coming up next after Ethereum. So I love to use one very specific, you can call it an indicator, to measure the sentiment and the different trends that are taking place within the crypto market at any given time. And that is market cap dominance. And if you guys want to flash this market cap dominance chart on the screen, one thing I want to point out is and let's forget about Dogecoin here, because this has been kicking butt just the last few days. The first thing that's really obvious is that year to date, since the beginning of the year, Ethereum and Bitcoin have seen their dominance of the overall cryptocurrency market cap steadily rise. Typically, when sentiment is as euphoric as it is now, when everyone is expecting a bull market to break out any day, you're not going to expect to see Bitcoin and Ethereum leading the market. You're going to expect more speculative stuff. So the next biggest would be Solana. Avalanche is another big coin up there. You have Polkadot's getting big. You've got all these large cap altcoins that have been around for a long time that you would expect would be more popular right now. But since the beginning of the year, we've seen those give up their market cap dominance. Well, Bitcoin and Ethereum have taken over. So that tells me these ETFs have been working exactly like everyone expected them to. Most of the new inflows are very likely going directly to the two top biggest coins, being Bitcoin and Ethereum. There's a very good chance there's already buying in Ethereum in the anticipation of its approval. So you can imagine for the two largest coins in the market to have the price action that they have in just the past 2 months since the beginning of the year because of these ETFs. If a much smaller market cap coin were to so much as get applications filed, the rally on its price would probably dwell what we've been seeing in Bitcoin and Ethereum.
And Holden, what would make you change your mind here? I mean, the answer here is quite obvious, but what would be some of the signs that you would look for leading up to something that would really make you change your mind here about the U.S. government approving these types of ETFs?
Well, the big thing for me is again, I'm super focused on what happens with these Ethereum applications, not necessarily for the sake of Ethereum, but for the sake of what I think will be the next to get ETF applications filed. And for me, that's Solana. And differentiating Solana from Ethereum it's a fun game to try to play, especially if you're a big Ethereum maximalist. But at the end of the day, Solana is the biggest rival or competitor to Ethereum in the market. It is one of the longer established coins. It survived a somewhat tumultuous past involved with the whole FTX crisis, and they're still around. And the confidence from a retail standpoint in Solana seems to be stronger than any other blockchain that I've taken note of. I've personally been trading NFTs, staking, doing all kinds of DeFi activity on Solana since last cycle when it came out. So I think that the retail, popularity of Solana, which is very similar to how Ethereum was popularized last cycle with its own NFT craze, will really do a good job in pushing Solana to the top of that list of what's next for ETF applications. So what would kill that? Mish was saying we haven't really seen enough. Oh, sorry, that's my dog in the background. We've never really seen a negative news event since the FTX crash that marked the bottom of last cycle. Sorry, my dog never barks. This is funny. She's so good too. And
maybe she has something to say about ETF approvals, Holden.
Yeah, she's been talking crap to me about it.
Yeah, she's saying buy Dogecoin.
She thinks it's going to be Chainlink and not Solana. No, but really, truly, unless something cataclysmic happens, like a Luna event or an FTX event, Solana is a strong number 3 in the crypto market right now behind Bitcoin and Ethereum. And I think Ethereum getting approved is the green light for Solana applications to come next.
Mish, any daylight between you and Holden there?
Well, I want to step back a little bit because I think there's two really important things that I'd like to emphasize from all the conversation that you had with Holden. Number one is going back to the research. People tend, especially in this space, because has so many facets to it with so many different coins, overanalyze, the old analysis paralysis. And I think it's really super important, just as he pointed out that his charts were relatively simple, you saw mine were relatively simple as well, is to not to get too bogged down in all the nuances of all of the developments that happen within the cryptocurrency space. It's going to be constant. And if that's where your focus is, you might miss this great breakout over a simple 50-day moving average kind of thing. So it always is best as investors to have a mind set on one level in the fundamentals of the research, but really to be more technically based, not only so that you see the signal, but so that you have a risk parameter. That's number one. The other thing I want to say in terms of mega trends in and of themselves, because I'm a huge follower of mega trends. We've been talking about all different types of mega trends through the years, but what comes to my mind right now is like the gaming mega trend that really started in 2004. And in any mega trend, even though we know that gaming was something that was going to continue to grow, there are things that survive and there are companies that don't for whatever reasons, whether it's mismanagement, poor earnings, higher interest rates, recessionary times, whatever it is, they fall out of favor because something newer and shinier comes up. The same thing's going to happen in this space. And I think that that's really important to understand. So right now, as you pointed out, you've got the Bitcoin, you got the Ethereum really outperforming, maybe Solana's third on the heels. I'm looking at our XRP down there at the very bottom. The point is not all of this will survive. So I think it doesn't mean it'll be the end of the mega trend. It just means we'll have the normal shakeout that you have in anything in life when something gets too saturated and the cream rises to the top.
Right. And if I could add a little bit to that, Mish, within the longer crypto cycles that we observe, when you get into a bull market, the conversation very quickly shifts to when is it time to be in Bitcoin? When is it time to be in altcoins, right? I've been seeing altcoin season all over my timeline for the last week now. But one of the biggest indicators that I love to rely on that has nothing to do with technicals is, you can call it the bozo indicator, the idiot indicator, when people that I know who know nothing about crypto, have never traded, have no financial know-how, nothing, start texting me about a coin that they like, that means something really good is coming around the corner. That's the sign that retail is back. They're involved. I've had more coins shilled to me in just the past month or two than at any point in the past. And when you start seeing brand new, near meaningless meme coins, like what we saw with AMC or GME last cycle, popping off with $1 billion market caps, like I'm thinking Bonk or Pepe or Dogecoin, these coins that have no reason to be moving, that are moving or are beginning to move, are a really good indicator of the overall sentiment of the market. And I think that we will very soon see a rotation from Bitcoin and Ethereum, which have been leading all year, back trickling down into some of the more speculative opportunities in the crypto market. And when Ethereum's ETF gets approved, that's going to open the floodgates on anyone who's got any favorite coin that they've been sitting on for a long time. That's going to reinvigorate their hopes that, hey, maybe this is going to be the next Ethereum.
We don't want to be too flippant there, because you're talking about the front end, let's say, but of course on the back end of that, there can be real pain. I mean, we know people in this space, serious and amateurish, who experienced a real pain on the back end of it, but you're talking about a very specific time frame there.
Well, yeah, if you're worried about the pain of it, we do have risk managed quantitative approaches to trading this market. And if you don't want to speculate and you don't want to buy and hold and you don't want to just FOMO into whatever it is that's hot at any given time, having a calculated approach is really going to be the best way to trade this market.
And Mish, you're going to say?
Yeah, well, so I'm a perfect example, right? I'll go back to obviously a generation that would have never even conceived of this until more recently. So I bought Coinbase for the fund that we have for all the reasons we mentioned, but also because of our models that are all coin-based, I have an actual wallet. And what's been great is I haven't really had to have too much thought into what's trending next, because when these things get moving, they become like physics. Once something's in motion, it tends to stay in motion and it feeds upon itself. So I've been in and out of Matic, Solana, Chainlink, Ethereum and Bitcoin, obviously. And there was one other that you had mentioned before. It's probably on the list that I've also traded. And all Solana. I don't think I mentioned that. All because of these ideas of risk management, momentum indicators, get in, have parameters to get out, take your profit, move your stops. And so that normalization, that mass adoption of being able to trade things that I couldn't possibly explain to you what a chain link does versus a Solana, and I'm not even going to pretend to. That's Holden's job. But what I do know is they trend beautifully and they're technically amazing. And with the algorithms behind it, it's been a lot of fun.
This is where those tools come into play. We have a bunch of questions coming in and not a ton of time left, so I want to get through them. L. Owens on the RV website. What are your research thoughts on Bitcoin miners post-halving? Should we start with you on that, Holden?
Sure. Well, in the last day or two, that's been a really interesting question. And I've got a fact. I encourage anyone who's watching this to do the same. I need to fact check and do my due diligence on the numbers that I've been seeing on my timelines to make sure that they're right. But right now, there appears to be more demand thanks to these new Bitcoin ETFs for Bitcoin than there is Bitcoin being mined on a daily basis. Again, I haven't verified that, but it kind of seems to make sense with such a rapid increase in demand on it. After the halving event, if that scenario is true, and that is what's propping up the price of Bitcoin so much right now, the halving event means that the rate at which new coins are going to be introduced into circulation is going to get cut in half. So if anyone out there is banking on some kind of supply shock, that's your catalyst.
We'll follow up with you, Artur, my colleague and I, who's producing this piece. We'll follow up with you. You can always post and in the comment section as a follow-up to that, Holden. Another question coming in from Matt on the RV platform. Thoughts on ordinals, so-called Bitcoin NFTs? You want to pick that up as well, Holden?
Yes.
Well, I guess I can just maybe from a philosophical standpoint. I'm not a Bitcoin maximalist, but I do like Bitcoin, and I've traded it in the past. Like I have many other coins, and I've traded NFTs on multiple blockchains. I've been pretty involved. I've not yet gotten involved with ordinals, but to me, what it represents is the community and the ability for community-driven initiatives to build on, the great accomplishments of those that came before us. Bitcoin was never really designed for this kind of stuff, but seeing where the blockchain and the technology is being transformed is interesting, to say the least.
We've got another question coming in from Shane. I'll ask you to pick this one up. Mish, what do you think about Coinbase's issues with outages like the one over the past 2 days?
Yes, it was kind of scary to see the balances go to zero. Well, that's one of the things I mentioned in terms of, you could always get a hack or a cybersecurity event. In this case, it didn't last too long. It was about an hour or so. But I did hold my breath for a moment. And I'm sure multiply that by many, many people. But yet at the same token, there was an immediate announcement by Coinbase. Don't worry, it's just a glitch. Everything will be back. Your money's still there. And hopefully that doesn't happen too often. But yeah, if that becomes a more frequent occurrence, that could really shake things up a bit.
And that's one of the big things that's powered on Solana haters for quite some time now, is these outages. And this is new technology. Coinbase being down for an hour yesterday, how's that any different from AT&T, T-Mobile, Verizon a week or two ago being down for a couple hours when we all woke up?
Fair point.
Right. So I think that as the technology grows and as prices continue to rally, the susceptibility for news to impact price will increase. But it seems like, based on the way that Coinbase traded in reaction to that outage, which it maybe dropped $5-10 for a short period, it was unbothered. So I think that speaks pretty loudly for the stock.
small gap there. Just a couple more questions coming in. One from Kamal. Do you consider fundamentals and actual tech usage as well? Mish, you wanna pick that up?
Do I consider fundamentals and actual tech usage? I just want to make sure I understand that question.
Yeah, that's what they're asking there. You
All right.
Holden, you're scrunching your face.
Yeah, go ahead.
If I think I understand it, I can
Yeah.
try to. Well, if you're talking about tech usage or just adoption, which is what it sounds like you're asking, there are plenty of sources and tons of data available out there. I know Glassnode's got a ton of stuff on flows, not only of coins, but the creation and use of wallets, where there are new wallets on which chains have the most activity. You can see, hey, NFT trading's gone significantly up on this blockchain. These representations of adoption are really all that we've got at the moment. So again, I like to focus on where retail is really actually not just trading the coin, but participating in its technology. And there is definitely a short list of layer ones that you can look at that meet that criteria. So there's just a handful of coins that have had a heck of a lot more adoption than all the others, and they shouldn't be too hard to spot.
And one last question for you, Holden. Someone, it's L. Owens again asking, Holden mentions he likes Solana NFTs. Any favorites?
Well, right now it's been the meme coins, right? I'm not going any big swings on any of these small cap coins, but it seems like every other day there's a new project that's doing a 10x, 100x. NFTs, I have mostly stuck to my blue chips from last cycle. I'm not going to share any specific projects, but again, you just got to look at how quickly Bonk got to $1 billion market cap. Or right now, it's dog with hat. With is probably already there, close to it. You can trade your NFTs, but it's going to be a lot less predictable, in my opinion, than sticking to the coins.
Mish, I'm going to ask you to close out not just this edition, but our entire series this week on research, how the pros do it. This question, I think, is fundamental. We heard Peter Bookvar talk about not emulating people too much. That might help you on your start, but the severe limitations to that. When it comes to this approach and all the years that you have at doing this, Mish, what do you do to differentiate yourself from the pack when it comes to research?
Well, number one is I think that I have a certain innate sense of what is trending based on not only consumer tastes, but just overall in general. The fact that I started out as a commodities trader gave me a unique ability to be able to really purse together why something starts to explode. And so what I do is I look for signs ahead of the game. Like, so let's take inflation, for example. In 2020, I was already calling for some event. Of course, I could have never guessed what it was, that would have to spur on inflation, because you could see that there was a real disconnect between where equities were going at the time and the ratio between that and commodities. So that's where I'm a student. I'm a student when things get really distorted, number one. And number two is, in that distortion, if I'm already seeing the underpinnings of its trending through consumers, starting to complain about higher costs, or now with the diet drugs, I've been all over the fact that this could be a real boon to the US economy. I think that's where my research brain comes. But ultimately, at the end of the day, I am always going to check a chart, and I am always going to engage in a position because I see a good risk reward parameter. And I think that's really what might separate me from a lot of the fundamentalists, but also separate me a little bit from the technicians, because I may be early because I can smell something before it actually happens.
Yeah, I think it's not just your ability to feel the pulse, Mish, but we talked about stitching together, but also the way that you distill that. And I think that's why the RV community has come to respect you so greatly over all of your years here with us. Just a reminder for folks, if you want to check out the new tool that we're offering in the RV marketplace with Market Gauge. It's called Crypto Pulse. Normally just about $1,000, but coming in well under $800 for anybody on the Real Vision marketplace. You can head over there or just go to realvision.com/crypto Mish, and you'll add the code RealVision to get that discount. Notes right here in the description below this episode. Mish, Holden, I can't think of a better way to finish out my Friday and this special week on research. So thank you so much. We'll be tracking these in our 3 Ideas tracker. So we'll come back to you, and hopefully you'll be able to take a victory lap along with some of our other big hitters.
Thanks for having us.
Yeah, thank you, Samuel. And I'm so glad that the RV space got to know Holden a little bit better, because he's amazingly awesome. And this whole quant model really is on the basis of so much that he has learned and applied from research and technical analysis. There you go. Perfect blend.
Can't wait to see more of him right here. And hope you guys have an excellent weekend.
Thank you so much.
too.
You too.